Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Friday, July 31st. The year's 2020. Let's talk trading. It's time for the weekly wrap-up and the monthly wrap-up. Two wrap-ups all in the same day. Just so you know, these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. Part of that education purposes only is that I'm educating you to make sure that you don't lose any more on one particular trade than you're willing to lose. That is your risk management, your brain management. No fear, no regret. That way you won't have any pain, because all pain comes from your reaction to the market, self-induced pain. On the money management side, take profit before the market takes it back. If you've been trading the pound dollar this morning, let me tell you, you could have been up 30 pips and it would have taken it back more than once. So, right now we are 82 pips off of the high of the week. All gaps filled if you're just tuning in late. Something interesting here on the pound. We got into the zone, the range of the opening day of the year, the opening day range. You can see we poked it, but we dropped below it now by 27 pips. You see we're only 157 pips below the yearly open here. On the day is just now turning red. You see it popped up. 690 pips from the monthly open. Once again on the day, no inside bar trade, not even close. Once again, broke out of the previous day's high. And from, let's see, it looks like it was about a 50, 60 some pip breakout there. Lots of pairs with the range over 100. Funny thing is, not the pound dollar. Missed it by 4 pips. But then again, we still have some time left. It could push down further. There's the pivot point. It's been missed. But you can see here that first short trade heading towards the pivot was profitable. Here might have been profit for a couple of pips or a scratch. But if you look here at these wicks, you see price went down, price came back up, price went down, price came back up, price went down, price came back up, price went down, and it's in the process of coming back up. So once again, depending on where you got in, you could have been sitting on a 20 pip winner, and the next thing you know, it would have taken it back. In fact, Walmall and I, we were talking, and he wasn't having a very good day today. But he was making some recovery, and he went short, and he called it. We were talking, and whenever we're talking and trading, you just interrupt the other guy. He's like, short it. I think we went short at 55. So I waited. I think it was 55, and then price came back up, and I jumped in short, and I think he took a 3 pip profit, but I was kind of swinging for the fences, so I just put in my stop loss at break even +1, and I wound up with 17.5 pips, and he was all mad. So, and I know you're listening out there, Walmall. Yeah, I'm telling on you, but we'll have you on next week so you can tell your side of the story. But he wasn't really mad, but I know it bothered him. Okay, red rats have feasted. Green rats, your turn. Be careful. And now, it's kind of funny. On the rat indicator, every now and then it'll come up with something like strong LWP. and people want to know what it is. And I guess, you know, you probably are curious, and if I had an indicator and something come up, I'd want to know what it is too. But then again, you can think, well, if he didn't tell me about it, maybe I really don't need to know it. Because if you're trading the rat zone, it's simple. So long as you enter along here, you did it right. Doesn't matter the reason why you entered or how you entered. Just as long as you entered in here, if you entered short here, you did it right. Meaning, you entered in the place the method tells you to enter in. Because it's a statistical trade. That's all it is. If price gets in this area, chances are it's going to come out. If price gets in this area, chances are it's going to come out. Now, of course, during the day, those areas move, but that's trading. Price moves, makes new highs and new lows. So if price were to drop another 20 pips, then this point would be here and this point would be down here. And that's why you have a stop loss. And you put your stop loss just outside of here, just outside of here, to the upside, here to the downside. And you position size accordingly. So you don't wind up losing more than you're willing to lose. That's all part of your risk management. It's not that difficult. And if you're doing this and you're taking, more than a handful of trades a day, then you're most likely over trading. And that's something that you can't do. Now in scalping, you might think that, hey, you're going to be scalping every minute or every other minute or something. You don't have to do that. You can sit back and wait. And that's what I did this morning with the pound. I got in a trade somewhere around here and it went against me. So then I put in another short at 60. It came down. I took profit off of that one. Then it came back up. And I think I did it like 2 or 3 times. And then it finally gave me a profit off of the 50 short. It wasn't that I was adding to a loser. What I was doing separate trades because I was looking at price action. And so every time it would get to 60, I would go short again. And then in fact, I think I might have been short here and then it went up almost to 70, which I probably would have shorted again, but as you can see, it never quite hit 70. But then it came down and paid anyway. But this one right here, I missed. And what had happened was I was watching the price action on the 1 minute chart. In fact, maybe we should switch over. Where is the 1 minute chart? Well, let's turn this into a 1 minute chart. And let me see if I can find it. See, was it before there? There was some place right about here. Yeah, here it is. This pattern right here. It was making higher lows, and it was kind of making a flat top. But I noticed that it hit 55 and bounced, hit 55 and bounced, hit 55 and bounced. And I'm thinking right here, and that was my problem. I was thinking. Because it was making higher lows, it was going to bust up to 60 again. Ha ha, joke's on me. Had I traded what I've been seeing, I would have shorted at 55 and maybe I could have gotten, a nice 20 or 30 pip or more drop. But see this right here, I mean, higher lows, you can see it's almost forming that wedge or pennant pattern. And so had I gone long here, I would have gotten nailed. But I was waiting for it to go 60 because I was thinking short. So if it would have gotten up to the 60 area, then right here, I wanted to short again, because you see what happened, how many times it came off of that 60. But this time it was pushing, and it didn't push higher, and the bottom just fell right out. But that's trading. And so here, every time it hit 55, I could have shorted and picked up 1 or 2 pips. It was almost easy every time. But I was trading off of the 0 lines, the 50 and the 60. I wasn't trading off the 5 line. And that's what happens. Sometimes you just don't get it. And that's okay. Where were we? Pivot, we missed again. So you can see here for the month of July, 1, 2, 3, 4, 5 missed pivots so far. And the week, we missed a week. So maybe next month, August, it'll take out some of those pivots. In and out of the wick zone, guess what? We're back in the wick zone. But I would imagine before the end of the day, it's going to be out of the wick zone. And just looking at some of the ranges for the daily, 96 pips are the 23 percentile, meaning out of the last 100 bars, 23 bars were less than 96. The average range over the last 100 bars was 144. For the H1, you can see here, we've had some above average runs these last 4 hours, just huge. Lots of pips to be had. And the smart range is all here. You can see we're just now starting out the new M1 candle. And for those of you trading pure price action, there was a nice short at the 30, a long at the 40, which I was kicking myself last hour. It's like, why didn't I take that long? Well, I know why I didn't, because it came all the way from down here and went up and came back down. But once again, just trading what you see, not what you think. And one other thing about these indicators, please, traders, don't get so hung up on the indicators. Just don't. If anything, just almost get rid of all the indicators. Just use a blank chart. Or if you do, just keep it simple. Because the success in trading is not in the indicators, it's in you as the trader. Because there's been plenty of people over the decades now that have seen this simple chart, trading with the H1 candle color at the line, and they fail. And there's also others that do it and they've succeeded. It's not the method, it's not the indicator. There's no one indicator that you're going to add that's going to all of a sudden turn you from a losing trader into a winning trader. No. What's going to turn you from a losing trader into a winning trader is that you master the fundamentals of the risk management, of the money management, of the brain management, and you stick with one method and one pair long enough so the statistics play out in your favor. You have to be like a casino. Okay? In other words, you take the trades, not what you think, but what you see, what's happening. You take this trade at the line. You take this trade at the line. Are you going to win every time? No. Does the casino win every time? No. But over the long haul, if your risk management's in place, you're going to see that you're going to come out ahead. So, fellow traders, I hope you had a profitable week and a profitable month. and have a safe and fun weekend. And just remember, when you come back to your trading platform, it's not what you trade, it's how you trade it. So drain the banks. TheRumpledOne signing.